Welcome to the daily update video about Bitcoin and macroeconomic situation. First of all, we'll be looking at the US dollar index. We have been seeing in the past few days the US dollar index has been going up exponentially, like it had broke the record of the decades. But right now it's taking a breather, or you can say a correction, which I expected that it would be finding its support somewhat near $101.5, which I just marked yesterday. And exactly there, the US dollar is respecting our support. The stocks, commodities, and the crypto market is inversely related to the dollar strength index. When the dollar goes up, usually the markets go down, and vice versa. However, we are right now observing that the strength of dollar has been decreasing, and consequently the stocks have been going up, including the S&P 500, DJI 30 and Nasdaq. Yesterday we discussed the targets of S&P 500 as 4136 and 4150, and S&P 500 reached both of its targets, as well as Nasdaq reached one of its target at 308 points. DJI has also been going up in the past few days. If you can see the percentage growth in these stocks, DJI has gone almost 8.4% from its bottom of this year, while S&P 500, if we see how S&P 500 has gone up from its bottom of this year, approximately 9.13%. Now for Nasdaq, which includes all the tech stocks for Apple, Google, Tesla, it has gone up by 10.3%. However, Bitcoin has been following the Nasdaq and the tech stocks for a while, going down all downside. But right now Bitcoin is not falling when they are bouncing strongly. This primarily may be due to the investor interest or investor confidence in the crypto market volatility. We'll be proceeding to the total crypto market capital. Yesterday I used to depict these three important resistance zones for the total crypto market capital. Currently we are still below the 1.2 trillion market capital, and today we try to break the resistance. However, we are still at $1.19 trillion, and it seems apparently that there is very low volume in the market, or investor interest is very low in the crypto market currently. This chart is on daily time frame. If we see it on 4 hours time frame, we'll still observe that the body is small and the wicks are large. That means the selling pressure is still high in the crypto market, and there is no strong or proper bounce observed. Let's start with Bitcoin chart on the weekly time frame. We have two important things to observe on the Bitcoin weekly time frame. One is the 100 moving average, that is the blue line, and the other is 200 moving average, that is the red line. Currently Bitcoin break its 100 moving average on 2nd May 2022, while we are still above the 200 moving average. 200 moving average has been most of the time the bottom of the bear markets. If we go all the way back to the COVID crash, which was around this time, we usually have always bounced from the 200 moving average. But right now our price is in the range of 28,000 to 29,000, and it's been revolving in this range for quite a while. On smaller time frame, let's say 4-hour time frame or daily time frame, Bitcoin is still in the range which we were discussing previously. Bitcoin has nicely been following this falling channel. However, currently if we observe the volume in the Bitcoin, let's see the trading volume in Bitcoin. Since the volume is decreasing, this shows that the investor interest or the amount of trading going on in Bitcoin is decreasing, which clearly shows that our price is having weak pumps. There is no strong bounce observed in Bitcoin as well as the total crypto market capital. The invalidation point I have posted for this one. is that 32,200, and if we close 4-hour candle above it, then this pattern of our wave 4 would be invalidated. Right now there is a very strong chance still existing that we'll be reaching the range of 23,000 to 21,000. Most importantly 22,000, as we also have the 200 weekly moving average, which is usually marked as the bottom of the bear markets. Currently there is still a strong sell-off as VIX represent and all of the bitcoins for our candles. If we proceed to BTC dominance, the BTC dominance has been going up for a while and it's going up strongly. This shows that money has been flowing from the other parts of the market, especially other cryptocurrencies and the large cap altcoins to Bitcoin. When this dominance increases, the price action of Bitcoins usually stabilizes while the bleeding of the altcoin continues, which is due to two factors. First of all, decrease in the total market capital of the cryptocurrencies, which we can see, and the increase in Bitcoin dominance of that remaining market capital. However, usually in this bear markets to end, we need this dominance to go near to 50 or even sometimes $60%, so that Bitcoin sees a strong bounce on its weekly chart. Unless we observe a strong bounce, first of all Bitcoin has to go up, then the money flow from Bitcoin to altcoins. Since we have not observed any breakout of 46% market dominance, that therefore we are not observing any strong demand or interest of the market in Bitcoin right now, which we expect to see in coming weeks or coming months, as our stocks are quite performing well and have bounced well from the bottoms. I hope the video was useful. Please like, share and subscribe if you find this video useful. Thank you for watching.